As you've just been hearing, the Reserve Bank Governor has welcomed recommendations that he says will strengthen the governance of the bank and its monetary policy direction. Let's bring you some more analysis now. Shane Oliver, Chief Economist with the AMP, joins us live. Shane, really appreciate your time. Thank you. These sweeping changes have been opposed. What stood out to you as the most significant in terms of how this country will be handling monetary policy going forward?
I think the most significant change is to the Reserve Bank Board, to the separation or construction of a monetary policy board charged with setting monetary policy, with that board having more specific experts in terms of monetary policy setting. That's probably the most significant change coming from all of this. The Reserve Bank review did affirm the 2 to 3% flexible inflation target and did also reaffirm the independence of the central bank. But the big change, I think, will come with the construction of that new board, which I think will be better placed to challenge the input coming from the Reserve Bank, and therefore should be able to better implement monetary policy. Although I wouldn't exaggerate the change that's going to flow on that front. I don't see any major changes to monetary policy going forward. If you're looking for a lower mortgage rate, that's not going to happen immediately. But hopefully through time, it could lead to better communications and better monetary policy.
At the moment, as it stands, 11 out of the 12 months, mortgage holders around the country get nervous on every first Tuesday of the month, waiting for a decision. The recommendation here is that will be reduced down to 8 times a year. What's the thinking behind that? Is that a good move, do you think?
Look, I think that makes sense, because if you think about it, we have a meeting once every month, but oftentimes there's not enough new information between meetings. For example, since the last meeting, we have not had an update on retail sales, and that won't occur until after the next meeting. So the Reserve Bank will be making decisions in May, telling us that they'll be looking at retail sales and household spending, but they won't have had a new update on retail sales by the time they have to make that decision. So I think spreading it out to every 6 weeks makes sense. And in that sense, I'm quite supportive of that. What it could mean, though, and this is the downside, is that because the Reserve Bank would have less goes at it, so to speak, is that it might have to move more aggressively at some meetings. And that's what you've seen in other central banks that have a less frequent meeting structure. When they do move, more often they have to move by more than the Reserve Bank does.
What do you think about Phil Lowe? Shane, is he the right person to implement these changes? As we heard in that news conference a little bit earlier, he was asked a number of questions about his future. He obviously says he'd be happy to stay on. Do you think he'll be given that chance?
Look, I think he should be, to be honest with you. He has made some mistakes, and obviously there was mistakes about the 3-year bond target and the ending of that program, but more importantly, the 2024 guidance regarding interest rates, and that set a lot of people off down the wrong path and has adversely affected them financially. But by the same token, he has learned from those mistakes. We are halfway through, I think, a war on inflation. Changing commanders through that war is not a good thing. We've seen this in the past when it happened in the US, for example, in the early 1970s, when President Nixon got rid of the then Fed chair and replaced them with Arthur Burns. I think that set back their control of inflation by at least a decade. So I think it would be a mistake to change him right now. But by the same token, this is a decision for the government, and perhaps they do want to show we've got fresh blood at the Reserve Bank. But the problem is that once you make that change, it will take a while for the new governor to re-establish their inflation-fighting credentials. And right now, with Governor Lowe, at least he does have good credibility on that front.
Yeah, it sounds like a big decision that the government and the Treasurer Jim Chalmers are still mulling over, and we won't know for another few months. But we'll all be keen to know when it happens. Shane, really appreciate your analysis. As always, thanks so much.
Thank you. My pleasure.